So you talked about your supply numbers, and now what the analyst community has gotten perfectly right are their demand forecasts for BESS in particular. That was sarcasm.
Oh, good. That was so straight that I completely missed it.
Welcome back to Rockstock Channel. It is Thursday, November 27th, American Thanksgiving Day, and Matt is back after a week off with Rodney and me for another Rockstock recap episode, which will be followed by another in our series of Washington, D.C. policy and politics discussions, this time with Ben Steinberg, a top lobbyist at Venn Strategies. As America moves at warp speed to address it and its allies' critical minerals vulnerabilities and to win the AI and the age of electricity arms race, it is important to keep a close eye on the movers and shakers in Washington. We will continue to do our best to bring you relevant content in this regard and encourage you to tune in to that conversation with Ben. And likewise, our recent video with Craig Shesky, CFO of the Metals Company, who took some time on the sidelines of the Benchmark conference last week in Los Angeles to provide an update with Rodney and me in our video, Clear Sailing in U.S. Permitting. I'd also like to flag that with lithium earnings season complete last week with SQM's results, RK Equity has now published its proprietary lithium quarterly earnings summary. This note discusses how the lithium producers performed last quarter, comparing production, costs, and cash positions. We usually reserve this for our clients, but as a Thanksgiving thank you, we're sharing it with all Rockstock Channel viewers and listeners. To get your own copy, email us at rockstockchannel@rkequity.com and we'll send it over. And before we begin, we'd like to thank our sponsors, Lithium Royalty Corp and USCF Investments. Lithium Royalty Corp trades on the Toronto Stock Exchange, ticker symbol LARC, and holds more than 30 royalties on hard rock and brine lithium projects around the world, including Core Lithium in Australia, Sigma in Brazil, and Trey Q and Mariana in Argentina, operated by Zijin and Ganfeng. UCF Investments has been a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposure, broad diversification with SDCI, and thematic strategies such as ZSB for battery metals and USG for gold with income. To learn more, you can watch our inaugural episode with their CEO, John Love, right here on Rockstock Channel, and visit uscfinvestments.com. And lastly, please note that my advisory firm, RK Equity, is an advisor to and holds equity interests in a number of companies that may be mentioned in today's discussion. But we are not, of course, financial advisors, and this video is for informational purposes only and should not be considered investment advice. Please read the disclaimer at the end of this video and do your own research. And with that out of the way, welcome back, Matt. You published 2 new insights over the past 2 days of relevance to anyone who cares about lithium. Why don't you dig into those?
Sure. Okay. The first really just in terms of looking at supply demand, and we hear a lot of numbers sort of being quoted in the press on X, on LinkedIn. You know, lithium demand is going to go to Y, it's going to go to Z, it's going to grow at this sort of rate, and you know, there's been a lot of analysts reports over the last sort of 3 or 4 months upgrading their lithium views. And I wanted to sort of go in and sort of understand what was behind these forecasts. So I looked at 10 analyst reports that have come out in the last 3 or 4 months. And I wondered, you know, what level they were coming off. So I looked at the historic data, and not one analyst report, the historic data was duplicated. Each analyst report, 10 analyst reports, had 10 different sets of historic data going back 4 or 5 years. And it's very clear that there is not a single historic data set in the industry that everybody agrees on. So if you've got, for instance, you know, 1 million tons of supply in, say, 2022 or 2023 in your model, and you're forecasting, say, 2 million tons of supply by 2027 or something, you've got a different growth rate to somebody who, say, has 1.3 million tons of supply in 2023 in their models. So, it's very, very difficult to understand what commentators are saying in terms of demand growth, supply and demand balances, if none of these numbers are fungible across the industry. And basically, my blog is calling on a central body, for instance, like the International Lithium Association, to sort of sit down with the consultants and say, look, guys, we need to arrive at a standardized historical number, similar to what we see, in the copper industry, the aluminium industry, the steel industry, the silver industry, where there is an international trade body that sits down and says, right, well, these are historic numbers, and therefore it's much easier to forecast our demand and supply off the back of that once we have a reasonable sort of historic data set. Because at the moment,
That's
it's a disaster.
sorry, surely. I mean, the biggest issue would be what is the inventory level as you start whatever the current year is.
Yeah. Yeah. I
What's
mean,
transpired in the end, we need to know how much is in the system and then supply
yeah.
demand for the year we're in, because that's really what we're all trying to figure out is if you're carrying higher inventory from the year before, then you could be way off.
Yeah. Yeah. So, I mean, you need to know what agreed supply is. You need to know what agreed demand is. You need to have some way of calculating what the inventory is in the system. And it's impossible to really forecast prices to any great extent if you don't have those numbers. So I think it is a really, really important thing for the industry. So, that's the first piece. That was the blog post. The second
Actually,
piece.
before
Yeah.
you go into the second piece, I just want to ask, so what was the size of the market in 2024? Like I know you say it's different, but you have an estimate, but like when Albemarle puts out that like it's going to be, I don't know, now they have a range, but like previously they were like 3.3 million tons in 2030, right? Or YJ Lee has like 4.6 million tons. So I was under the impression that like thereabouts last year was like 1.5, right? And this year is like 1.7. But what do
Yeah.
you
Okay.
what
So
do you
so
think it
I
is?
can read the numbers off from my screen. So I can tell you that for 2024 supply, one bulge bracket broker has 1.4 million tons in 2024. This is LCE terms. Um, one bulge bracket broker has 1.2 million tons. One Australian broker has 1.19 million tons. One bulge bracket broker has 1.44 million tons. I mean, it's all over the shop. There's a 20% range from the highest number to the lowest number. So, you know, Albemarle, depending on which consultant they use, maybe at the top end of the range, they may be at the bottom end of the range, they may be in the middle of the range. But because the consultants are all using slightly different data sets, they're all good on different areas. It's very difficult to come up with a number for what's real.
Okay. And what's your number?
I haven't got my model open at the moment. That's sitting
Mine
on the
for
fence,
mine
isn't
for
it?
last year, mine for last year was 1.35. Just to throw another one out and
Yeah.
pin it in the mix.
My number for last year, let's see. Supply, I've got 1.2, 1.22.
Okay. And what do you have it for this year? Like this year's almost over. Estimate.
For this year, I've got 1.5.
1.5. Okay.
Yeah.
So 300,000 tons added this year.
Yeah.
And how does that look in the next kind of couple of years? For any of our viewers who are interested, we do maintain these proprietary models. We share them with our clients. If you're interested in this proprietary data, we have offered it to Patreon subscribers of ours at the highest tiers. So, I mean, this is highly relevant, Matt, right? That we're all trying to figure it out. You were right for a long period of time. You were wrong for a period of time. You're going to be right again. But a lot of people were right or wrong. Goldman, is very negative a couple of years ago, and they were right for the wrong reasons. We're going to talk about their latest note shortly, but this is a critical, problem in the industry, but it's also, the opportunity. That's why there's boom bust cycles.
Yeah, so I've got 24% supply growth in 26 and 16% supply growth in 27.
Okay. Supply growth.
Supply growth. Yeah.
Okay. So can you help us with the numbers specifically? Just so you're going from 1.2 to 1.5 this year in 2026
to around about 1.9 in 26 and then 2.2 in 27.
2.2 in 2027. Okay. So that's supply. Okay. And you track pretty much every project on the planet that you can learn about and know about.
Yeah. So, I mean, one of the things that I think is very important, and the reason actually I went into this exercise in the first place, is I think a lot of Western brokers are underestimating Chinese supply, not necessarily just Chinese supply in China, but China-controlled supply outside China, particularly in Africa. And that's one of the reasons I initiated this exercise. I still haven't got to the bottom of which brokers are forecasting what in terms of Chinese supply. Some of them state it, some of them don't. But for me, most of the ones who have quite low supply numbers are not forecasting enough supply from China, in my view.
Okay. We'll get to demand in a minute, but talk about your second post.
Yeah, so the second post is really on inventories, and those of you who sort of read my comments on LinkedIn and X over the last 4 or 5 weeks or so will be aware that I feel that there's a strong seasonality in inventory levels in China, that generally inventories fall in October and the beginning of November and then start to plateau in the middle towards the end of November and into December. They did very much do that last year. And obviously there is a very strong inverse correlation between prices and inventories. What I mean by that is when inventories fall, prices go up. So this latest run that we've had on prices has correlated very strongly with a fall in both GFEX, lithium carbonate inventories, and lithium carbonate inventories in China at smelters and at cathode manufacturers. So there are signs now on the daily and weekly series that inventories are starting to flatten out. They're starting to decline less fast. And if that's the case, then we could see a pause in the rate of growth of price over the next couple of weeks. So it's just a caution. First of all, to say, look, prices on GFEX, they're not like spitting around all over the place. They are correlated to what inventories are doing. But it's also a caution to say, look, inventories look as though they've stopped declining, and that could have an impact on price. Could go sideways for a little bit. Could see a little bit of a pause in the spike.
Okay, great. Thank you. So that's a very short-term kind of like analysis on inventories.
Very short term. Just a trading analysis, not an event analysis.
Right. Okay. So I do so you talked about your supply numbers, and now what the analyst community has gotten perfectly right are their demand forecasts for BESS in particular. That was sarcasm.
Oh, good. That was so straight that I completely missed it.
So we're going to flash up here a Canaccord Lithium upgrading BESS estimates. That was November 18th. And then Goldman Sachs, similarly, has a note here. Goldman has upgrading near-term lithium chemical and spodumene prices, but it's already priced into Australian lithium stocks, and they're saying sell LTR, PLS, and MIN. So they've maintained, kind of a negative outlook. But you read through their. Why don't we go with the Goldman note, Rodney and Matt? I think you both had comments, and I also shared this with YJ Lee, and I'll share his comments as well.
I mean, the thing, Howard, that stood out for me on the base demand is that they had it ramp up and then flatline. And essentially their oversupply for 2030 is, relative to my model, completely eliminated simply with my differential in where I see best demand in 2030. So they've got the compound growth rate really slowing down. So I think, broadly speaking, my best demand, lithium demand, was about 400,000 tons higher than theirs in 2030. And that would eliminate entirely the oversupply. So in comparison, it comes down to that, Matt. I'm sure you saw that as well in their numbers.
Yeah, I mean, it's really amateurish analysis, in my view, to only forecast 2 years and then effectively go back to sort of long-term growth rates. I mean, quite frankly, it's pathetic. And you expect better from a bank like Goldman's. Even the IEA forecasts longer than 2 years explicitly. And as we all know, I'm not a big fan of the IEA's forecasts on sort of solar and everything else. So, it's pretty amateurish to only forecast 2 years and then have, growth going to flat.
The other
Or
thing
small
is
growth.
the expectation of supply if you've got spodumene going back under 1,000.
Yeah, they're forecasting lepidolite from China to grow from 233 to 336, 100,000 ton increase between 2026 and 2027, which would not be incentivized, at the prices that they're forecasting, whatever, 1,000, 1,100. Okay, so Goldman note, we don't think is a good arbiter, but we should never dismiss, because everyone laughed at Goldman when they said lithium prices were going to be 11,000 when they were 80,000, and they were right. Again, maybe for the wrong reasons, but nevertheless, they were right. And Canaccord note. Okay, so Canaccord basically saying lifting demand expectations on strong growth in BESS. More than 330 gigawatt hours of BESS capacity expected to be installed in 2025, representing a 220% increase on our prior forecast. We mentioned this in our last video, and also YJ Lee is saying this is, absolutely ridiculous, and that such a high or change in estimates. But bottom line, it just goes, however difficult it is to figure out what the supply was, in the last kind of 4 or 5 years, Matt, the BESS dynamic has just been hard to track. Everyone tracks the EV models, and Matt, I think you're doing some work on, the EV forecast component that viewers will see in coming days or weeks. But the BESS demand is just.
I mean, I wrote in my blog series on solar installations recently. I did that 4 or 5 part blog series on solar installation forecasts and how the major consultants, the major organizations were under egging that. And there is a BESS article in there that highlights, how big BESS could be. I mean, it's really interesting to contrast the Canaccord note with the Goldman note. I mean, if I'm reading this correctly, in 2930, Canaccord's consumption of lithium from BESS is very similar to Goldman's. So it's not like it's just Goldman's that is out of the money, should we say? I mean, Canaccord's got very slow growth in BESS past what, 28.
Yeah, well, that was the point YJ was making. It was just like
Yeah.
rapid growth for 2 years, then flatline, which you
Yeah.
said was, so they did the same mistake as Goldman
Yeah.
in that regard.
Yeah.
Okay.
So I mean, it's very difficult to make a call on the sector if you're only forecasting out for 2 years. You got to forecast, 5, 6, 7 years explicitly.
Yeah. So we caught up with Chris Robb yesterday, Matt, you and I, and he was at the Benchmark event, and he was giving his, kind of download and takeaways. And one of the bullet points, the highlight, or the top bullet point that he mentioned was ESS is booming, right? It's now 100% on the radar, whereas before it was, just this, interesting, but not that interesting. So we've been talking about that since this time last year when we interviewed, Vivas Kumar at Mitrachem, talking about uninterrupted power. And so Rodney and Matt, you have both been outlier bullish. So again, you're right most of the time, wrong some of the time on BESS, flagging it. We've definitely been at the forefront of that, and it's good to see that even an uber bear like Chris Robb last year, he turned more bullish, at the Fast Markets conference. He actually shared that he's quite bullish, 2027, 2026, he feels lithium prices may go sideways. But another significant takeaway that he found from the conference was listening to Patrick Howarth of Exxon talking about what they're doing, in the smackover. And he basically just said, it just reminded him how giant companies, are very slow, and methodical, right? So if you're a lithium bull and you're worried about all of a sudden, a quick 100,000 tons or 200,000 tons coming from the smackover, don't worry, it won't be that fast because, I found that to be interesting because a year and 2 years ago, Exxon kind of came out at Fast Markets. They were like the platinum sponsor. They had synchronized swimming, promotion and a big party. And they announced like SK On, as an offtake partner, and I think one other offtake partner. They were doing podcasts. They were very promotional about their lithium business, and now it's largely been pretty silent, on Exxon's side. So I know, that they just had this big Arkansas event last month, and there's a lot of optimism. We'll see. I'm rooting for Standard Lithium, to get fully funded with Equinor. They get 20,000 tons, but this is not going to be fast. He also said that it's been pretty radio silent in the Salton Sea, which is true. We had, Control Thermal on our podcast. We basically shared our information, with him about that, but that's been pretty silent. But the other thing that he said is Rio Tinto, and he has a long history of trading lots of commodities at Glencore. So he watches and knows Rio and, the nickel market and the PGM market and just how Rio behaves. And it's a different dynamic with Mr. Iron Ore guy, Trot, at the helm. And December 4th, they're going to be putting out their strategy day. They already announced, boron in California is for sale. It's highly likely that they're going to be selling their iron ore and titanium business in Quebec. But he was just like, Rio is going to be quite methodical. You have views, Matt, on this, but, Quebec could be a casualty. We're hearing, from multiple people that, Paul Graves is not going to continue. We'll see. That's just a rumor, but as the head of Lithium. So a lot of changes. So the optimism that they might move super fast on multiple projects, it looks very much like he's reevaluating Rio's current portfolio, and they're getting rid of a lot of, smaller materials, and lithium in the larger scheme of things within Rio is still small. Your
Yeah, I
thoughts,
mean,
Matt?
my perspective in terms of how Rio thinks, and I'm by no means an expert on how Rio thinks, but my perspective is that Rio wants to be in world-class bottom quartile assets in all of the industries that they operate in. And realistically, in lithium, that means the brine assets that they acquired in Latin America and the recent brine assets that they've acquired in Chile. They've obviously abandoned the Jadar asset in Serbia. That one's gone. And then if I look at Quebec, yes, they are good assets from the point of view of hard rock, but hard rock is not bottom of the cost curve. So Rio wants large assets that they can operate at high capacity and at low cost that will make an impact into their bottom line. And I think it was very telling that after buying Arcadium, they still went in and did these joint ventures in Chile on the Chilean brine assets. So for me, it's the optionality of the brine assets that we should be looking at with regards to Rio, not so much the Canadian assets at this point in time. Now, whether they just sort of mothball them or actually actively try to sell them in the industry, I don't know. But that would be where I would be focusing in terms of Rio's strategy, I think.
On your point on the Chile, I mean, that acquisition was a Rio negotiated deal, not an Arcadium negotiated deal. So to the extent that we're right about, Paul prospectively leaving, and it looks like Rio is basically taking control of that business. And but they did say goodbye to Yadar, which was a Rio business, as well. So anyhow, okay, so that's interesting. I'll make a comment. There was a tweet. Trump and Scott Bessent said that Trump and Xi are going to have 4 visits next year. That's pretty significant, and it is a midterm election year. So I put out a tweet. Again, fingers crossed, thumbs up for grand bargain. There is a consideration that this 1-year reprieve on rare earths, which was negotiated last month, that ends before election day. So if China wanted to create some havoc, at the midterms, they retain that leverage. But overall, I just see, a further warming of relations between the two countries, and they don't want to go to war. But you commented, Matt, on this. There's a very smart blogger out of Europe on China. We could flash this up. I forget what he was saying, but this call that she had where she initiated it, which is rare, and it was mainly focused on Taiwan. And we'll flash it up here. That I'm not an expert in this at all, but it's a very interesting. The G2 world is emerging, and China is, evolving as a major player. They don't want war, but they're also not just sitting back quietly.
Yeah, I mean, I think it was a blog with very, very interesting perspectives about, China's relationships with Japan, China's relationships with Taiwan, and how China, would prefer to work with the US around its relationships, and perhaps trying to restart China's relationship with the US after a period of quite difficult relations. So it's a very interesting perspective. I haven't. It just came out this morning, so I haven't really had the time to really consider it to a great extent. But I felt it was a really interesting commentary on the call.
Okay, I think broadly, and Rodney, feel free to chime in. Like the last 10 years, there's been bipartisan support in America to be, confrontational and adversarial vis-a-vis China. Like looking at this from a win-lose, it's a fight, it's a war, it's Cold War, whatever, a trade war. But that's warming, it's thawing. There's a mutual respect, coming, and both Xi and Trump, are looking at he's like the China dream was modeled after the American dream, right? So that's kind of like make China great again, or make China great, and America's make America great again. I think both countries have their own problems that they need to resolve, and but they realize
They
that
do, but in the end, Howard, China, because of low domestic consumption, is an export-orientated market, and America's been the, call it what you will, dumping ground for those products. So what you've seen now is a flex from the US's side on tariffs, and China realizing they need to, but then there's rare earths and other sensitive commodities that need to flow between the parties, but you sort of couldn't leave it. And then, of course, you got Europe and Africa and everyone else caught out because China redirected their goods to them. I know in Africa, they've exported a large amount. So there's going to need to be a new way forward, and you couldn't leave things as they were. So it was something that they're tackling. We'll need to see the obvious outcome, which is something you've always talked about, is if you get Chinese entities allowed to invest and build in the US.
I think that's huge. But to your point, Rodney, about there being an export economy, can they stimulate domestic consumption? I think consumption is only like 40% or something of their GDP
Yeah, and
compared
the
to
problem
America,
you
which is
have, how it
70%.
is, there is not really an equity market. If you look at China's stock exchange, it's done a bit recently, but over the last 15 years, done nothing. It's been property, and property, of course, speculators ran ahead, and that market has been struggling to put wealth into the hands of individuals because there's been oversupply. So, and then I think China as a whole is a nation of savers rather than consumers and debt driven. So,
But
if
there
you
has
run
been
a
one
largely,
industry where Chinese domestic consumption has trumped everybody else's, which is the EV industry.
Right. And there
Um,
have been incentives for that,
yeah,
right? There's
but
lots of,
it's difficult how like a third of companies in China are profitless. So the question is, where does the debt sit across the regional banks and the central government and so on, where, we are aware of companies that lose money and still get propped up. So it's very difficult to get people to spend if they're losing money. So it is, it is an interesting one with the backdrop, of course. I don't want to go down the rabbit hole, but a changing world demographic. I mean, Europe, I think the EU or Europe registered the lowest number of births since 1962, I think, last year. So there's not future consumers being born. They are in Africa. They're just not being born in Europe. And even the States and elsewhere is below fertility, replacement rate. So these are things that have to be tackled.
I think another really important point is that it seems that equity markets agree with you, Howard, particularly in critical raw materials, that if China and the US are making friendships now, then critical raw materials are less important. But I would suggest that quite the opposite. I mean, we've potentially kicked the can down the road by maybe 6 to 12 months with regards to many critical raw materials markets. But if we want to develop industries of our own in the West, then we need, prices to recover. We need projects outside China, and we need prices to incentivize those projects. So if you look at, the equity valuations of a lot of the critical raw material stocks, they've absolutely collapsed in the last 6 or 8 weeks or so. They seem to be valuing in that the Chinese and the Americans are, going back to sort of kumbayas and happy-go-lucky with each other, and that seems to me to be very far from the truth. So there's some really interesting opportunities, I think, across the critical raw material space. Antimony, silver, lithium, other battery commodities, where there's been quite a substantial sell-off, rare earths as well, where there's been quite a substantial sell-off, which for me is not justified.
and we are going to be following up on those non-lithium minerals as well in future episodes. I agree with you. There was a lot of frothiness and speculation and, algorithmic trading that pushed things up to high levels, and it pushed bad quality up with the good quality. And now the good quality and the bad quality are falling back. So much of 2026 is going to be separating the wheat from the chaff. And we are trying very hard to find the wheat. So with
And bring
that,
the wheat to you.
yeah. So with that, I would just like to thank again our sponsor, USCF Investments, who have been making it easier to get exposure to commodities investments for almost 20 years. USCF Sustainable Battery Metal Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with John Love and visit uscfinvestments.com. And thanks as well to Lithium Royalty Corp, who just announced a new royalty with Grid Metals, who we featured here on the podcast. They also published their Q3 results, which demonstrated 86% growth in revenue from last year's third quarter, which included first royalty payment from their 3Q project operated by Zijin and mining in Argentina. To read that press release, visit their website, lithiumroyaltycorp.com, and follow them on X at lithium_royalty. And with that, please stay tuned for our interview with Ben Steinberg of Venn Strategies. Welcome back to Rockstock Channel. It is Monday, November 24th, and it's just me today as a host with Ben Steinberg, a friend of mine in Washington, D.C. we had on the podcast maybe 2 years ago. Ben is a lobbyist, a real live lobbyist at Venn Strategies, which will flash up here on the screen. And he also, or Venn Strategies, has a, what is it, the Battery Metals Coalition? Is that right, Ben?
The Battery Materials and Technology Coalition. Yep.
Okay, so that's what lobbyists do. They have a bunch of clients and they gather them together to support certain legislation. And in that battery coalition are companies like Piedmont Lithium and Talon and Nouveau Monde and Standard Lithium, some of which, a number of those have been clients and featured of RK Equities and on this podcast. So I came into contact with Ben a few years ago when the IRA was passed, and every one of the companies I just mentioned were, needed a lobbyist to help understand how to get money, grant money, or loan money out of the administration. But now we have a new administration who's writing equity checks. So, Ben, I'm sure you're helping navigate that for a number of your other clients. So we're going to have a broad-based conversation here. This is a Washington kind of policy 1 year or so, taking stock a year after the election of Trump. Where are we? It's been a kind of a tale of two halves, with the first half focused on the one big, beautiful bill. And, the second half has been a number of other things, but lots of deals in our space. So I'll just leave that as the beginning. I'll just remind all our viewers, we may mention some companies, public companies in here, but we are not financial advisors, as always, and everything we say is not financial advice. Please do your own research and read the disclaimer at the end of this video. So with that, Ben, we had Jigar Shah, former head of the Loan Programs Office at the DOE, recently interviewed, and he said that the one big, beautiful bill was the second best clean energy bill ever, passed by the legislature, just behind, the Inflation Reduction Act. So, let's start with that.
Yeah, Jigger is a smart man. He's right. I was at Department of Energy at the beginning of the Recovery Act in 2010, 2009, 2010. That would be the third best clean energy bill. So I would agree that the One Big Beautiful Bill Act still has a lot of key provisions in it that support the industry. I know there's been a lot of headlines on solar and wind and how those credits were cut back, but you had things like geothermal and hydrogen, and of course critical minerals and batteries that did quite well in the bill. So yes, the critical minerals provision is not, with no sunset, but these pieces of legislation, let me remind you, will come up for an ending, and people will fight for reauthorizing and extending them. So that once it gets into the system, that's sort of the game in Washington on the Hill, is to try to reauthorize them. But we were quite pleased with what happened with 45X.
45X, remind our viewers what that does.
Yeah, that's an advanced production tax credit you get a 10% production tax credit for critical minerals that are not associated with foreign entities of concern, now called prohibited foreign entities. You also, for battery makers, you get a $35 or $45 per kilowatt hour tax credit as well. And then if you're deploying things like batteries, there's the 48E tax credit for utilities and independent power producers, where you get a certain tax credit for deployment. That's an investment tax credit.
Okay, great. So 10% on production, and what did you say, 45
Yeah.
or
If you're doing the
$45 per kilowatt
module and
hour for
pack
batteries?
along with the cell, that's the $45
Okay.
per kilowatt hour.
Okay.
Yep.
So basically subsidizing critical minerals, subsidizing batteries, and helping utilities, which are increasingly part of the dialogue, which wasn't so much 2 years ago. It was all about electric vehicles. Now we're talking about electricity and the AI arms race and competing there. So, okay.
I mean, it's interesting. If you eliminate solar and wind, which were the cheapest way of getting things on the grid, you kind of look around and you say, okay, well, now I have natural gas and batteries to power this energy and AI dominance agenda, and that's what we're seeing the administration really focus on, as well as Congress.
That's what Elon Musk's XAI in Memphis is, natural gas plus batteries. But I am wondering, Next Era Energy, I've referenced this numerous times, have said that like solar plus wind plus batteries is the cheapest and fastest to deploy. So are those being deployed regardless of there being the subsidies in place?
They are being deployed, and I think a lot of folks, especially in the near term, are trying to safe harbor their projects so that, the beginning of construction can be, go back to now, rather than having them, start in a year from now or 2 years from now when the credit's not there. They are safe harboring their projects. So we are going to see an extension of the use of those credits, even for solar and wind, in the short term. In the long term, I really think they are still going to be used, especially solar, because it is the cheapest form of getting power on the grid quickly. And I don't see the data center providers and the utilities shying away from that.
Okay, so that's good, and you need the battery backup for solar. So if solar grows, batteries grow, and need for raw materials grow. So it's my observation and other people that I've talked to that a lot of if we just look at critical minerals and what the administration's done, Jigger had a very high profile with the loan programs office, writing big checks, putting out, these liftoff reports. And, we now have Chris Wright, who has been sending a bit different messages from there. You have, last under Biden, I don't even remember the name of the Department of Commerce person, but Howard Lutnick's all over the place. I don't remember the Department of Interior very much, but Doug Burgum is all over the place. And the Department of War, you see Pete Hegseth, but Pete Hegseth hasn't been so much talk about critical minerals. But there are some people at the Department of War, I guess, in the Pentagon who are um, writing checks and taking some significant role, is certainly with MP Materials. And then you have Rubio, who has been making peace deals, and in some cases in countries that have critical minerals, and it's like part of that agenda. So could you just like help us understand, if you're a viewer of this, you're a junior company and you want to help, this isn't so much a how to navigate Washington. These groups do need to figure this out, but we are just seeing lots and lots of developers, are taking pictures of themselves and posting on LinkedIn. Here I am at the White House. Here I am at the Department of Commerce. Here I am at right, in ways we weren't seeing. So, how is it evolving? How has it evolved this year under Trump, and how is it different from how it was under Biden?
I think it's a renewed focus on supply side industrial policy, focused on the mineral going into the tech versus maybe the auto OEMs or defense prime driving a lot of those discussions. I think the Biden administration was trying to do both at the same time, which is very challenging. How do you lift up the whole supply chain, which is, by the way, what you need to do for it to work in this country if we're lacking the supply chain for certain tech. So how is it working here? This administration is driven by the president. It's very clear who's in charge and making decisions. People are going in and out of the Oval Office all day, every day. Um, he started his administration with a critical minerals focus. He declared an energy emergency. He said minerals are energy. Then it put out a minerals EO and executive order. And that's really driven by a combination of the National Security Council and the National Energy Dominance Council staff. Those are sort of the two main councils that support the president on these efforts. And then you have a series of agencies involved in, you named the main ones, which are Department of War, Department of Energy, and Department of Commerce. When it comes to mineral implementation, you do have elements of other agencies like Secretary Rubio, also the National Security Advisor involved, and the head of USTR, U.S. Trade Representative Jameson Greer involved. So you do get other elements of this, or Doug Burgum involved with public lands. But generally, it's those three agencies that are driving this. You mentioned deals. So the agency that's really driving the deal making and the person behind that is the Deputy Secretary of War, Steve Feinberg. He has a private equity background. He brought in his deal team to really drive a lot of action around minerals, and they got sort of the first like DOW, you take care of this nod. And so they're the ones who have structured most of these deals with a little bit of energy and commerce involved in there. Commerce,
Is
however,
that, I'm sorry, this Steve
yeah,
Feinberg, he's the ex-Cerberus CEO?
yep,
Okay, and he's the one who wrote the deal with MP Materials.
yep, and his team. He has a really competent, capable team who has a finance and investment background. Yeah, so they're involved in all this, but what has happened is they've set up an investment council that is managed by the White House, where they meet twice a week and they discuss projects and initiatives. They go mineral by mineral. So they have a mineral by mineral strategy. There are now 60 minerals on the Department of Interior critical minerals list, and they're going mineral by mineral to figure out where is it being mined, where is it being processed, how do we get access to it, where is it going. And they've also incorporated, when they're working with a minerals company, they're wanting to see the minerals company tied to an off-taker and other investors. So that is really part of the everyday workings of the White House with those three agencies plus others. I think XM Bank and Development Finance Corporation are part of that. They have investment experience, but that's sort of your nucleus, is this team working through those mineral by mineral strategies plus the investments that need to go into them so that we raise up the industry in this country.
Are they coordinating across those agencies? Like, because you mentioned Steve Feinberg at DOW, the Pentagon has very specific and focused, like on defense minerals, I would think, right? That's what rare earths was critically important, although rare earths is more than just defense. But um, in like Lithium America's case, right, when they took that equity, that wasn't the Department of War, that was the Department of Energy check. So the negotiator was the Department of Energy, but that was a already pregnant, deal. But as they look at new deals, right, are they coordinating? So is Steve Feinberg coordinating with DOE, coordinating with the XM, or
Yeah, I
are they
mean, I
doing these
think
things separately?
I think the deputy secretary is, probably has final say on a lot of this, but his team is coordinating every day. It's a tightly coordinated effort across the interagency right now. So they are leaning on each other's equities. I think you're astute in pointing out the Lithium Americas deal. I would expect DOE, given its battery experience, to do more in the battery materials space, and that would be coordinated with the Department of War. But there's also, like, Department of Commerce has some chips money that they've stated they want to use for minerals that go into chips, gallium, germanium, other rare earths, graphite. And yet we just saw the Department of War do a Defense Production Act contract for gallium and scandium, which could have been, I guess, the Department of Commerce. So there is going to be some overlap, but I think your framing of, like, who should be the lead is likely where they're trying to place these companies. And, I'll give the example, we're talking about batteries, where DOE has a new remit from this administration to focus on batteries. So I do think the minerals and the supply chain will feed into that work that they're launching now.
Okay, that sounds like news to me, that the DOE has a new remit, because all I've heard from Chris Wright, and I asked Jigar Shah this, like, again, next year energy, like a lot of people say solar plus batteries or wind plus batteries is the cheapest and fastest to deploy on the grid. And then you have David Sachs talking about we can't lose the AI arms race, and the AI arms race is very energy focused. Natural gas is going to take too long. Coal is too long, too expensive. Nuclear way in the future. But you're not hearing Chris Wright. He didn't say anything anti-battery. He has said things anti-wind. He has said some things anti-solar, but you haven't heard any pro-battery discussion out of Chris Wright's mouth, or almost anybody in the administration.
You're exactly right. It's been a silence, and it's been a policy in parentheses. So batteries has been grouped in the critical minerals executive order and the trade investigations, the 232 national security trade investigations, as derivative products, in parentheses batteries. So they've been silent. And just up until recently, we've heard that the interagency, convened by the White House, is organizing around energy and AI dominance, specifically on looking at ways to deploy more batteries on the grid to get to have the grid, boosted with capacity. So, and dispatchable power, flexible dispatchable power that's different from natural gas. So I do see a renewed interagency effort. And then in addition, you have something that happened last week, which was the DOE reorganizing, and they created a critical minerals office, which is also attached to energy innovation. And they have combined elements of the energy efficiency and renewable energy and the manufacturing and energy supply chains office, which was covering battery materials, to create this effort. It's going to be run by an assistant secretary that will report directly to Chris Wright, and her name is Audrey Robertson. She started several weeks ago, and she's going to have the remit on critical minerals and batteries, among other key tech like turbines and other things. But this is a big move by the department to showcase and consolidate some of the work they're doing in this space.
Okay, so that's tangible evidence. We spoke a few weeks ago, and I've referenced a conversation to an unnamed person in Washington that I spoke to who basically said the White House finally gets it on batteries, and you're going to start to see a lot more deals. So Audrey, you just mentioned, who I'll look up, is a new person. Does she have a background similar to Steve Feinberg at the DOW, or the investment background?
She has an oil and gas background. There's something in her bio on sodium ion batteries, which will be important for grid deployment and next gen technology that a lot of people, me included, are excited about. So I think, in early conversations with her, she's excited to get to work. There is a connection between her and the White House. And so they're all coordinating, and she's been tapped to do this work among other key people in the administration. But really looking forward to her being at the department and taking this on.
Okay, interesting. You mentioned sodium ion because I know that Chris Wright had invested in a sodium ion company. I think that was Natron, which I think might have gone out of business or canceled that operation. So, okay, hopefully she'll understand the maturity of the lithium ion battery sector and the minerals that go into those batteries as an area that she should be focused on. Okay, so that's good. Look, I saw the Saudis here last week, and Elon Musk was there, and Trump referenced this auto deductibility feature, specifically benefiting Elon Musk, but it benefits anybody who takes out a loan. But I'm just noticing a bit of a bromance reemerging or a makeup. And also Elon's been tweeting, as has a friend of mine, not a friend, but someone I met recently at this Dervos, which Jigger invited me to conference, Jesse Peltan, who is just arguing everything about the sun, right? The amount of energy, coming from the sun. And then as it pertains to the grid, Elon said, the grid is, there's almost 2 times as much capacity for almost every hour of the year. But, so it's only a few hours a year, maybe 40 hours a year where you need that peak capacity. The rest of the time, you have underutilized capacity on the existing grid. So even without solar or wind, just deploying more batteries to the grid would enable us to increase capacity and utilize that for data centers. And Elon's good friends with David Sachs, who's the AI czar, right? Like, this is the administration of common sense, right? This is common sense. I would expect to see a lot more talk and about batteries and this whole logic, right? Is that a fair? We're going to start hearing this a lot
I
more, you
think
think?
that's right. I think if you were to create a hierarchy on the messaging on batteries, it would absolutely be that. It would be AI dominance and how do we make this work? It would then be on how do we feed the warfighter, which is more and more electrifying for lethality and logistics and everything, right? Drones to tactical vehicles, and then it's other, right? Commercial industrial applications. And then there is a silence, not a bashing, but a silence on things that move with batteries in them. So I don't see them really. I think they're staying silent on EVs. It was really much more active on the campaign trail, and it was a big part of the One Big Beautiful Bill Act conversation. But since then, I've heard silence on it and a
Well, do they?
recognition behind closed doors that that is the largest sector for battery materials.
Yeah, look, the EV mandate is gone. They won that battle. No more subsidy. But how is autonomy thinking evolving? I mean, we're seeing lots of. I bought a Tesla to take advantage of that expiring subsidy, and I use FSD every day. It drives me like it's like 98% there, and it's fantastic. So I'm a believer in autonomy like I wasn't until I became a user of it every day. And Waymos I saw they're opening up in Dallas and a few other, Texas cities. So
I
how is
do
that
see,
evolving in
yeah,
legislation toward
uh,
robo taxis?
yeah. I think that's complicated. I mean, it's not an area I'm an expert in, but it is evolving. I think this administration is a fan of it, and the mix of AI and autonomy is just a really big uh there's a big movement behind that, and conversations on how do we put this all together. So, from from a legislation standpoint, this is going to play out in the surface transportation reauthorization bill that's coming next year. And so those pieces of legislation are being drafted now by the Senate and House. And so we're going to see a lot of activity on autonomous vehicles and operations in that bill come January, really.
Okay, great. So Trump was in Asia recently, and he something in Australia, I think, or well, things that have come out recently are frameworks. A U.S. Japan framework, U.S. Australia framework, U.S. Argentina framework. I don't think I saw a U.S. Korea framework yet, and I definitely didn't see a U.S. Canada framework. But you have seen promises by the Koreans, by the Japanese, by the Saudis, now to put a lot of FDI into America. So could you just talk about this global deal making that's underway?
Yeah, I mean, if I were to couch the president in any way, it would be that he is a trade president. He loves tariffs, and he set up the entire way that he interacts with other countries as setting reciprocal tariffs, right? These IEEPA, the emergency tariffs, up. And a lot of the framing for sitting down bilaterally with another country has been around, this is the tariff I'm setting. If you want it to be better, we need to make a deal on all the things that we're trading back and forth, including potentially putting FDI in the U.S., right? Foreign direct investment. So that's been the framing. Now, it'll be very interesting to see how the Supreme Court rules on this. They've heard oral arguments, and so they're going to talk about it and potentially rule. And I see it as 50-50 whether this actually gets carried out or not. And on that front, you're not going to see the end of tariffs, even if the administration has to unwind these reciprocal tariffs. You're going to see the president, he will have to pay back some of these tariffs, which is going to be an administrative nightmare to those who were taxed at the border. But you have an opportunity as if you're in the administration to lean on other tariff tools like the 232, 301, 338 tariffs. I'm not going to get into the nuts and bolts of it, but there are ways that they can sort of levy those on products and countries should they see fit. So I want to let people know, if you're tracking trade, that this is still going to be the trade president. So, back to what you were saying on FDI, you've seen a lot of these deals with FDI, and one of the main things they talk about in all of those deals is critical minerals. It's wild. It is literally in almost every deal with every country that we've set up. And that means that it's not only the minerals, right? Remember the derivative products. It's not just batteries, it's magnets, it's chips, it's TVs, computers, everything, right? Where these minerals are going into it, with that they're thinking about. So they're looking at investment opportunities down to the mine, but all the way to the products that we buy and use. So, and we've seen it most actively so far in the Japan deal, but I really think other things are coming. I do think $200 billion for these kinds of deals is coming with South Korea. I think the other $150 billion was for shipbuilding. You're going to see investment from Australia. You're going to see investment from the Middle East. I don't think the Saudis are going to be the last Middle Eastern country to put FDI into the U.S. And work on these kinds of projects. So it's a really exciting time, and that can be matched with some of the domestic deals that the Department of War is working on, for instance.
Okay, that sounds great. It's very exciting. I look at I remember Howard Lutnick on 9/11 was on TV. He lost at Cantor Fitzgerald. I don't know, 250 employees, and we've interacted with Cantor Fitzgerald, on SPAC deals and other deals. I know lots of people there. So to see a guy like that, right? He's a deal maker, right? And he's like out there, and I spoke with Penny Althus of the Cove Kaz, which is signed a $1.4 billion deal for a tungsten mine in Kazakhstan. And he was telling me that like it was about to go to the Chinese, right? And China already controls it. So all of a sudden, Howard Lutnick and others in the administration mobilized to make sure that we won, right? And Howard Lutnick was, so that's like kind of, again, that's American deal making, that's investment banking, New York style. Don't want to lose that deal. It's exciting to see that the administration, like you were saying, Trump's in charge and Trump is a deal maker. Biden, as Trump likes to say, there's a picture of an auto pen, right? So who was
he was a diplomat, right? He spent a lot of his career running the Foreign Relations Committee in the Senate. He spent his entire career in government, and he meant well for the country, but he wasn't a deal maker like you have.
But you didn't know who was in charge. Here, there's no question of who's in charge, and from the top down, right? And the ones who are down are business people, right? They're at the highest levels of American industry, right? They're billionaire entrepreneurs, or they're unbelievably successful investors and deal makers. So, and America, to a large extent, has gotten raw deal over the last kind of 30 years, with a lot of emerging market countries and even developed countries. And so I think it's exciting but the fact that you're mentioning that critical minerals is in every single thing that they talk about, it's like, again, for 20, 30 years that I've been doing this as a business, it's always been offshore to China. It's lower cost, it's more efficient, and we'll just buy the finished products here. And we flag the risk of that. And now Scott Bessent is saying we were asleep at the switch, and we're trying to correct it as soon as possible, but it's going to take a while. So it's really important. It's good that there's bipartisan support for this in concept. The implementation is different. You were saying Biden focused both on the demand side and the supply side. Here, it looks like it's more supply focused. But so how there's so much happening. And I've largely had this prism of battery materials, but you look at nuclear, right? And they announced $80 billion of money is going for nuclear. So let's talk about that a little bit. And then I also want to talk about like this deal I mentioned for Vulcan Elements, right? 3 months ago, they did a Series A, $65 million. How are they getting $1.4 billion loan or package, of which 620 million, is a loan? Like how to, whereas there have been lots of other projects we've been tracking that have been, making around economic, like that's a magnet deal, or it's a magnet recycling story. I don't know the story so well, but the CEO of the company is very young, a couple of years out of, business school, college, whatever. How are these things happening?
Yeah. I can't speak to how they did it, but I can speak to the elements of what is attractive to the administration, which might have attracted them. I think they're looking for people who have private investment along with their public investment. They're looking for companies that have the appropriate financial sort of connections. They're looking for companies that have offtake agreements or partners that are willing to invest in them and eventually buy product. So all of those things are really important. And then, it could be that some of these companies also are working the foreign direct investment angle and have a foreign partner that is attractive to the administration. So I think a lot of that, and you mentioned some of this, but like having access and connections in this environment when these people are having multiple conversations with multiple companies all the time. Like, you need to be able to rise to the top, and a lot of that is access, and getting access and the ability to talk to them and get the deal done. So I think those are the elements of probably what brought Vulcan and Re-Element to the table, and hats off to them to getting the agreement done.
Okay, Ben, you have I didn't realize we overstepped so on a time here, so we're going to wrap this up relatively quickly. So on the nuclear side, an Oklo, if you can make any comments on that, and then if you have any other things that we didn't cover that you think are important to this time round.
Yeah, I think the administration from the first term to the second term has been very bullish on nuclear, as we need to win the nuclear race. Like, that's a lot of the energy innovation in this country came from the Manhattan Project. We invented a lot of that technology, and there's a lot of both civilian and military capabilities wrapped up in there, and it allows us to deploy a really interesting and important baseload power. So I think every administration, honestly, since the Manhattan Project, has been a fan of nuclear, this one included, and continues that pace. Super important. By the way, lots of critical minerals that go into the nuclear industry. I work with a graphite company that produces graphite that's has it gets radiated and is part of the shell of the nuclear reactor. So really interesting and important that they're invested in this. And then I would say, in closing, we're only 1 year in, and I think they're just have gotten their sea legs, are coordinated at the administration level, and we're going to see a lot of exciting things in the coming year play out. More deals are going to get done. Grants are going to be distributed. More loan money is going to be distributed. We really are going to see an uptick in activity. They've gotten their political teams at the assistant secretary in. So I do expect a lot of great things to come out of this year to come. And then the question will be, what happens after that, right? You have midterm elections. And so the political dynamic may shift. There might be even more gridlock in the system. And so really interesting to see this year coming up, and then what happens in the midterms.
Okay, one item that I will address in a future conversation with you is that this 1 year reprieve that Trump and Xi negotiated on rare earths was a few weeks ago, right? Like October, which is right before the midterms, if it's 1 year. So will Xi create some problems, just ahead of the election? Or is the announcement that Trump just did, he had a phone call with Xi today, they're meeting next year, then they're going to in China, then they're going to meet here, is a grand bargain or some other deal going to be done well ahead so he can campaign for the midterms on that trade success with China? You don't need to answer that. To be continued. We'll address that in a future video. Great seeing you, Ben. Thanks a lot.
Thanks, Howard.